This is the briefing for Friday, October 4th. Well, the employment numbers today certainly gave some fuel to the indices and brought them to testing upper resistance levels. So it's going to be really interesting to see how we open next week and determine whether we're going to break out to the upside. Now, this is hourly charts on the spiders, the Qs, and the Russell represented by the IWM. Now you can see this 574 area is where the spiders were testing it today. Came pretty close to it. The high today was right around 573, 573 half. Now in the Qs, now it's a little bit different. You can see there was this 3-day area of rotation here. I think this was really about the, let's see, that was about the 483, 484 area of the upper extreme, and it broke through there. Now it was interesting to see that it appeared that we were going to break open and really move pretty fast to the upside, but we got a pretty good retracement, and then it held right at this extreme here, and then we got this rotation all the way back up again. So it was very interesting to see the initial sell-off today. The market was up pretty good after the announcement at 8:30 a.m. Eastern Time. About the employment numbers, and then of course when the day session opened, was completely retraced, but then retraced once again this afternoon. Volume in the spiders ticked up slightly, also in the Qs, really low in the Russell. Russell traded through the 218 area. Next level of upside resistance is going to come in at 222. That's going to be a short-term resistance. Upside resistance is 490. Now this is going to be important to see whether we can break out of this rotation we've been in for probably 2 weeks or better of trading. The same thing here, and the same thing with the Russell. The Russell showing more weakness than the other indices, now coming back into this trading range. So it's going to be interesting to see what happens there. Interestingly enough, breadth expanded decent today. Now, this is S&P 500 breadth at 212, so it was less than 50% of the stocks in the S&P were trading higher. About the same for the Nasdaq, and in the Russell it was a little bit less than 50% as well. So looking at where we are longer term, we're holding in the spiders. We're holding in this area of rotation, this upside level, this upside area right around this 574 to 575 area is important. You can see the buying tail that came in today in today's trading. You can see volume was pretty low. 52-week highs minus 52-week lows ticked up slightly, and breadth in the NYSE was not really that strong, only 757 shares positive. In the Qs, the Nasdaq, right at this 488, 490 area is upside resistance. That's this level right through here. And of course we traded below it, and then of course the buying tail came in today's trading. Volume really low in the Qs as well, and breadth basically neutral in the Nasdaq. In the Russell, same thing, buying tail came in after we got that initial sell-off during the day, holding above this 215 area, I should say. And then of course upside resistance is going to come in right around 223 up to about the 225 area. This area right through here, which would take in this high and the high from these 2 days here, these 2 days. Now looking at overbought and oversold, we're neutral. Then this is going to be very interesting because this allows the indices to trade higher come Monday. Now, as I said just a minute ago, the internals were not that strong, but we really don't want them to come in and be very strong all in one trading day. That could be a sign of exhaustion. Volume is a little concerning on the rally today, and you can see total volume on the NYSE is down. This is the 10-week exponential moving average of volume, and you can see how it is declining as well. Same thing with the Nasdaq. Nasdaq volume down, total volume, and the 10-week exponential moving average is declining as well. So volume is a little bit concerning. Looking at the percentage of stocks above the 50 and 200-day moving average, you can see not increasing, not significantly. In the S&P 500 and 200 above the 200-day moving average, declining as well. In the Nasdaq, above the 50-day moving average, You can see declining in the 200-day moving average, and in the Russell, the percentage above is in a downtrend on the 50-day moving average, and the percentage of stocks above the 200-day moving average is in a downtrend as well. So what's going to be important for Monday is going to be these areas right here, 574, 490, and for the Russell, it's a little bit farther away, 222. Watch those areas carefully. Now, we have been in an area of rotation. It shows a little bit better in the Qs here. It's not as volatile as the S&Ps or the spiders were. But you can see this area, this goes all the way back prior to the 24th or 25th of September, all the way up through today's trading. So that's a pretty good amount of time. So this is resistance, and markets spend most of their time in rotation. So as we can see basically through here, so watch what happens very carefully. Now, if we trade through these upper resistance levels and you see volume increasing and the internals increasing, that's a pretty good signal we're going to get a breakout. It's going to be a fairly strong breakout. On the other hand, if we get a false breakout like we did here, then that's going to suggest potentially that you're going to see another rotation back through. Watch breadth carefully. If it diverges on a breakout, then that's a pretty clear signal we're going to see some type of a pause or some type of rotation back through the range again. But a move above these resistance levels on increasing volume and stronger breadth, clear signal we are breaking out and we are going to potentially new all-time highs. Have a great weekend, and I will pick this back up on Monday.